For watching. This is James Robertson with WorkSpace Real Estate, and today we're going to do a deep dive into 12603 Southwest Freeway. The advertised rate in this property right now, they're asking for $21 a foot to 24. Now I have a client there that's interested in renewing, so of course we want to get the most competitive rate possible. Now when we look at the data here, first I want to look at the curb appeal. They took some great shots. This building is a little older. It doesn't show it in the pictures. They did some nice photoshopping here with the clouds and everything else. The lobby's been recently renovated, and that's going to help them with their costs to get higher rates. This building was also just recently purchased in 2016. So you almost always have higher rates when you have a new guy coming in. So the curb appeal, like I said, it's not bad. It's right on the freeway. I think it's a great placement here. There's obviously other monument signage opportunities for the right type of tenant. So I think the visibility and everything, it's a nice looking building. There's also monument signage here as well. So now we're going to take a look at the analytics for this property. So we could see that in 2012 the vacancy rate was very high. So this building was almost half empty in 2012, 2013, and then as you see in 2014, they got real busy. So you see 2014, they got quite the lease up period here, where it went from 50% occupancy down all the way to almost 80% to 85% full. And that's when they sold the property. Now you're starting to see vacancy creep up. So that's interesting. You now look at the rental rates here. You had about 18 bucks a foot here in 2012, and it's been pretty stable. They climbed up when they were prepared to sell the property in 2016. This is when it actually sold, and it jumped up, which typically happens after you sell the property. Now it looks like it's teetering a little bit here. So let's see here, net absorption. You can see again there was a big lease up period. There had to be a big tenant that just left in 2015, 2016, and now things have been on a slight decline. So we want to use that to our advantage. Absolutely, we want to use that to our advantage. Here's a chart that shows 12603 Southwest Freeway compared to the leasing of, the greater market, Fort Bend and Sugar Land, and it shows just year after year how this has been performing consistently below market. So that's another helpful hint that there should be some flexibility here. We're definitely going to try to push and expect some movement as they have had some trouble getting people here. Now this is a nice chart because it shows the vacancy rate from 2012 to 2016, and it shows the rental rate. Now when we look at the vacancy rate, as I said before, this building was almost half empty from 2012 to 2014, and you also saw the rental rates were going to be on the lower end at 18 bucks a foot. Now it's interesting here how they went up in rental rate to about 21 bucks a foot, and as soon as they had this big tenant leave, the rate dropped. So you can see that sensitivity here. They were climbing up thinking they were going to get it leased up. When that tenant left, and it looks like they had to be a large tenant because there's a big drop here in vacancy, the rate also dropped. Now we got to 2014, rate starts climbing back up, but the vacancy continues to go down. So there may have been competing buildings that offered better rates. They may have been suffering because they hadn't renovated the building yet. But in either case, we can see here that it looks like the vacancy had bottomed out 2016, and now the vacancy is actually climbing again. So what that tells me is that this is when they sold the property. So they've had some losses in tenants since they sold the property here at these higher rates. I know from being in the building that tenants were upset at the rate increases, and you can see here that the rate increase jumped from 22 bucks a foot to 24, and that corresponds with people leaving as well. So this building is sensitive to rate hikes, and that's something I'm going to be talking about with the other broker. So I'm going to give you a quick run through of all of the other comps in this area. So when you look at other buildings like 12603, which is the building that we're focused on, that's where our client's at, you have buildings that range between 17 bucks a foot that are very nice And these are full gross buildings that are very competitive. And these are buildings that are going to be options for my client to move to if we don't get the rates that we want. And these are all big savings. If you have a 4,000 square foot tenant that is paying 17 bucks a foot as opposed to 22 bucks a foot, they're saving probably $20,000 to $30,000 at least when you talk about a 5-year term. So probably more. When we look at the other concessions, we'll probably be able to get. So this is a good opportunity. And now it's just up to us to leverage this data that we have, looking at all of these other alternatives that we have in the building. And as we can see, our subject building at 12603, let me find it here. Where is it? Where'd you go? So our subject building at 12603 is on the higher end because it's been recently renovated. But I would argue that all of the buildings that are more expensive they're newer buildings. While 12603 has been renovated on the inside, it still was built, in 1981. Look at these. This was built in 2013. This is built in 2008. This one's built in 96. So these are newer construction buildings that are still holding at a rate that's competitive. Now I have to add that these 23 bucks a foot here, these are modified gross leases. That means that once you add in electricity, they're probably closer to $26 a foot. So this is still priced at a discount, but again, we want to use the market data to get us better savings because we have a lot of competition, a lot of landlords here that'll fight for a tenant at 12603. So this is a good set of data, and I hope this information was helpful to you. So if you have any questions about the data here or these types of reports, just give us a shout. And thank you so much for watching.